Hello traders, good day, Vladimir here. This is the live market review, 6th of April 2017, one day before the FOMC, and the market is looking for direction. We can see a lot of zigzags on the major pairs and the indices. Yesterday the Fed with the FOMC sent a hint that they consider changing the numbers, let's say, of the quantitative easings they use, the program. We saw the drop of the the reliability the market has about it, and we saw the indices gaining new lows. Almost on all of them we saw these setups forming, which for us the traders means now a very good thing. As long as the top holds here, right, we can look for sell opportunities. Now, yes, tomorrow with the FOMC we might get maybe the beginning for the new low as planned and as expected technically. If and only if this low will not hold and we break through, then there is a good chance that this was just last double wave correction here, like this, and we create one more high, which would be basically kind of a special cycle here, okay, like one more final top before the summer. And in the summer, if the Fed really will make the move, we should see the bears taking soon control. But technically we already set, we had double cycle correction up, we had a break here of the trend line, and we can see it's fighting this area right now. We gain the momentum for lower lows once again. Looks good. And now let's see what the market brings with it, and that's relevant of course for all the other indices as well. The only difference is that the S&P was the only one gained this momentum. Dow Jones did not break through yet. The Nasdaq did also create this opportunity. That's why setups actually are good. Let's see if they're able to follow. Next one on the list would be the Australian dollar, which is the setup we want to trade. This is a double cycle that we have been talking about. It becomes very interesting, very relevant. Divergence is already here. We are on the bottom of this range here, and if we put on that this is the place, right, I refer to, and this is the area for us for action. We are looking for action. So for by tomorrow we would want, by ideal, to get one more low, and then our setup would be break above this high, retrace, and look for the buy to the top of the range once again. If current low holds, we would be looking at the previous top we have created already here. We would want to break above that, two waves retrace, and then with the breakout we would be looking for ups again. The idea here is to get a setup that will provide minimal risk, maximum potential reward, which we will want to go with. Aussie Canadian is doing exactly what was planned. That was the range at the end of the day, and it broke down, and now we have the potential divergence. So as long as it did not recreate itself and created a false break, the pressure remains bearish. There is a trend line going here. There are still two gaps to close right here. So the bearish pressure remains on, unchanged. The next one on the list will be the pound yen, which we have been talking about yesterday, and it so far holds well. And the buys remains on as long as this bottom holds. Those of you who are long, keep your longs. Have your stop loss on break even and give it a chance. Why? Because if it's really about to hold, then we have the monster area for the beginning of the move, and we can expect some monster continuation. If that's not about to happen yet, then we would get it on better prices somewhere lower, but that would be different setup on different period, okay, and then we will have enough time to rebuild our plan. Okay, but as for now, all my money already done there, already made, profits taken, and there is no chance to lose on such trade, so just give it a chance. Partial, but still a chance. OZN looks also like still remaining under some very interesting setup. We have the potential of going to the trend line, and this trend line would be also amazingly here, allowing this duplication. There's a very good chance we are aiming the 82 zone. Okay, currently there is a divergence here, but okay, here is the but. We're still on a bearish momentum from the weekly chart. So as long as we did not get the convergence here, and the pressure remains bearish. That's very important to understand. And here is why the bearish is yet on a bearish momentum. The weekly is on bearish momentum. We had two false breaks here. We had one on the top. Therefore, this is kind of a range for us yet, and we would expect it to go to the middle at least. Okay, that's why the pressure remains on and remains bearish for this pair. Okay, that's the idea here of this setup. And next one on the list, pound dollar. We want to see this move, a second move down here, and then we want heavily buys, or we want this triangle to hold, complete the breakout, retrace into waves, and we join the breakout of the triangle, expecting new highs to be taken. Euro dollar back to the trend line. Okay, and now is this is what the pair is doing, potentially finalizing its bottom around 106 ish, a bit higher, a bit lower. We could find potential buy setups of that situation here below this area or around this area with this divergence. We would connect the lows here. Once we get a break of the lows, we are going to get into the buy positions. How and what is the most suggested way to do that? First of all, connect the bottoms, right? You can do it this way or can do it this way. It won't change it much. And we will want to get a false break here. So for example, we would want to go here, break above to create a false break once again, and then create a step trading. 1, 2, 3, boom, breakout. And if you take a observe here on euro dollar here, okay, we are below the channel looking for possible buys in terms of days. We have the 5th yesterday and 8 and 9. So there is a very good chance we are actually around the bottoming zone. And here is the area for us. Okay, we have it slightly below 106, a bit below than 106. By ideal, we go there, we form the setup, make the false break as suggested, right? Breaking down, breaking up, step trading, and then we can expect the correction to the upside, following by all the rest of the pairs. And the next one on the list is the euro pound, which is doing so far what is expected. It remains on bearish pressure. I still prefer to get something like that, okay, like one more attempt to hold here some range or second leg up, and then for sales. So basically the plan was and remains the same: sell rallies. Okay, that was what it is, and we can find it of course on the intraday setups. Every rally in 2 waves, like here, 1, 2, would be an opportunity to go for sell. In that case, with a bearish hidden divergence. That's just an example, of course, how we can enjoy from the intraday sell opportunities following the longer term ideas. And that would be all, guys. All the rest, no changes. Okay, everything remains on. Just want to remind you also about the Aussie Kiwi, that we will want to see this pair doing one of the opportunities for us, holding the 61.8, and by then creating then higher highs for us, retrace and buys. Or if we go for duplication, then it should take us to around 107.50, 60 zone, and complete this divergence for us, and we are going to start for buys. By the way, this would be an amazing zone because that could be a magnet zone for 2 different cycles to duplicate on the same place. You see where it takes us? 107.50. If we really manage to go there, this is an amazing buy opportunity. If we break through, then we are heading towards 106 in average before we fly up. For us, we want to buy bottoms. That's what it is. That's all for today, friends. Thank you for watching. I wish you a wonderful weekend to come and safe non-farm payrolls trading. And remember, do not force. If there is no clear setup, simply do not trade it. Don't try to be a hero. Don't try to be on every single setup. You know that normally it does not end up well. Don't try to be smarter than Mr. Market. Thanks for your time. I'll see you with the weekly forecast. Yours, Vladimir Ribakov.